Very good morning. In this video, we'll be covering the component related to interest. Now, interest is levied on two components. One is delayed payment of taxes, and second component is excess availment and utilization of ITC component. Now, here the broader category contains two components. First thing, interest, interest in GST. Let's take in the entire GST, there are two components: A, B. First component is delayed payment. Second component is excess availment and utilization of, we'll put ITC. Now in the both the A and B combination, there are just two predominantly covered section numbers. The first section number that is covered is section 50, and the second, rule 88B. Section 51 has three components: 1, subsection 2 and subsection 3. Subsection 1 and 2 covers regarding situation A, that is delayed payment of taxes. Subsection 3 contains excess availment and utilization of ITC component, that is situation B, that is excess, always remember, availment plus utilization. These two components go hand in hand. Now regarding rule 88B, rule 88B also is kind of same combinations. So you'll find that rule 88B contains three subrules: subrule 1, subrule 2, subrule 3. Subrule 1 and 2 covers with respect to delayed payment of taxes. Subrule 3 contains with relation to excess availment and utilization of ITC. Now we'll come one by one. We'll just come clause by clause to the rules, and we'll have an overall understanding as fast as possible. Now we'll start. We'll create two columns for ease of understanding. And we'll start with section number 50, and we'll keep rule 88B in this side. Section 50 subsection 1 tells that you have to pay 18% taxes in cases where there is delayed payment of taxes. Subrule 2, subsection 2 tells that calculation of interest shall be as per prescribed manner. Now, if we'll have to also consider there is one proviso. There's one proviso. The proviso states that you have to pay 18% interest only on the component which you're discharging through cash ledger. So we'll just take one small example. So for example, your monthly liability is 100. Your liability is 100 and you have example ITC of 70 rupees. So you just have to pay interest on 30% on 30 rupees into 18 percentage into number of days. 365, and I have to calculate the number of days. Now, this proviso is only applicable on all the other cases except where you are paying such delayed payment of taxes on or after receiving notice under section 74, 73 or 74A. Now these are the components. Now Rule 88B sub rule 1 state the same fact as was mentioned in the same proviso is again repeated over here in just a slightly different manner. It just says that you have to pay interest on whatsoever amount you have paid through your electronic. One second, let me just copy the entire part. It just says that you have to pay interest only on the net amount which you are using, which you are paying through electronic cash ledger. Electronic which are using and paying through electronic cash ledger. And now second proviso, second sub rule, rule 88B sub rule 1 and sub rule 2 tells that in any case if you are discharging any liability other in other cases, like the first one predominantly contained in relation to returns. For any other cases, if you are paying any taxes, in those cases, from the due date of payment till the actual date of payment, you have to calculate interest at the rate of 18%, which is kind of deemed, which we are not required to even know about it. Now, there is one proviso for sub rule 1, which states that by any chance before the due date or actual date of filing, if you are able to deposit any amount in the electronic cash ledger and further you use the same particular cash ledger at a later point for discharging the GST amount, in those cases interest is only applicable on the net amount. Interest will be applicable on the net amount. Net amount, that is whatsoever is your liability, your minor example ITC, assuming that this case is not covered under 73 or section 74 or section 74A. For example, 100 rupees liability is there, 70 rupees we have credit, and we have already deposited some amount in electronic cash ledger. Subject to this condition. Before the due date or actual date of filing, we have deposited, example, 20 rupees. In this case, we just have to pay taxes on interest on rupees 10. We have to do this calculation at the rate of 18% multiplied by number of days from the due date till the actual date of filing divided by 365 days. As of now, we have just covered one combination. There are total two combinations. First one regarding interest on delayed payment of taxes, interest on excess availment and utilization of ITC. for this particular video, for this particular we will restrict ourselves to discussion only with respect to interest on delayed payment of taxes. Now in this component we have covered the respective section, respective subsection, respective provisos, respective rules and respective sub rules, and we also understood what is the manner of calculation. We always have to keep in mind we have to categorize into two components. One is regarding normal return related liability, and the second one you are paying after receiving a notice under section 74 or 73 or 74A in the current cases. Now in these cases you have to pay taxes, you have to pay interest. In cases of return liability you have to pay interest on the net liability, because section 50 subsection 1 the proviso states that you have to pay interest only on the cash component. And so as per sub rule, as per rule 88b sub rule 1 and proviso to that, that clearly tells that you only have to pay interest on the net component, that is for sure. And also you can also consider any amount which are deposited voluntarily in the cash ledger before the due date or the actual date of filing. You have made the payment. So what happens, even though you have not exactly paid to the government, but you have already deposited the cash amount in the cash ledger, in those cases you don't have to pay, you don't have to consider that amount for calculation of interest. So in net there are total two benefits. First one, your net GST pay, your gross GST payable 100, you minus the ITC in case you're voluntarily, if you're making the payment with, I'm only covering the cases as of now where 73, 74, 74A is not covered. In those cases your gross payment 100, you minus the ITC component 70, you minus the any amount which are deposited in the cash ledger before the due date of return filing or the actual date of filing. In those cases you minus that amount 100 minus 70 minus 20, so on the net amount of rupees 10 you pay tax at the rate of 18%. You calculate the interest at the rate of 18% for CGST and for SGST. Now this 18%, the calculation of interest is being specified in rule 88b, which states that the next day after the due date of filing, from that day till the actual date of payment, they have to consider those number of days for this return calculation. And now we'll just go to CBSE website. We'll just quickly run through whatsoever provisions are there, so you will get an understanding that in there it is actually written. You have to come to CBSE website and come to GST and come to Acts. You will come to GST, you will come to Acts. Once you come to Act, you will find the section numbers. You just have to navigate to section number 50. In the current case, section 50, you will find there will be three subsection, and for the first rule and for the first subsection, there will be a proviso to it. Now, first one tells that you have to pay it at the rate of 18%, as I told you, and the second proviso tells that shall be only levied on whatsoever you have been for you using through your electronic cash ledger. That means 100 minus ITC 70, net payable 30. In this cases, it is covered. You just have to pay interest on the rupees 30. Now, coming to subsection 2, which states that interest shall be calculated in a manner as may be prescribed from the date succeeding on which tax were due to be paid. As I told you, due date of payment, after the due date of payment till the actual date of payment. Now this is called with respect to section 50. Now let's go to rule 88b. In the same manner, you have to come. Now here the same. You just come to GST. You just click on rules, and you navigate yourself to rule 88b. In rule 88b, you will find the first sub rule tells that you just have to pay interest on only on the cash component. Second sub rule tells that by any chance, if you have deposited any amount in your electronic cash ledger before the due date of filing, in due date and actual date of filing, in those cases we will also consider the voluntary amount which are deposited in the cash ledger, and we will give you benefit of not paying interest on whatsoever you are deposited, because in a way your intention was very clear. You deposited to the government, for some reason you were not able to file the returns, so you had no problem with respect to saving that cash amount, because you withdraw from your cash and you made the deposit in your cash ledger. stated over here. And please always note that this cases doesn't cover if you made any payment with respect to after receiving notice under section 74, 73 or 74A. Now covering sub-rule 2, which states that in any other cases, interest shall be calculated in the following manner, as may be notified in section 1, section 50, subsection 1. Now this broad angle with respect to interest calculation. Now it's very simple. Just have two category, first category and second category. Anything which is, if you're making genuine delayed payment of taxes, like before receiving notice, if you're filing any returns on that, if you're paying any tax, always remember, make sure that you do the following steps. First one first one gross payable 100, you minus the ITC component 70, you minus the whatsoever voluntary deposit you have made in the electronic cash ledger if you made the deposit before the due date of filing. On the net component 100 minus 70 minus 20, on the net component of 10 rupees, you calculate interest at the rate of 18%. Now if divided by 365 days multiplied by number of days, if you want to calculate where whatsoever the due date is there plus 1 day, the next day from the due date till the actual date of payment, you have to consider these number of days for the payment of taxes. Now, yes, probably I will cover the major concept over here, and there are more few notifications and circulars covering here. But considering the requirement, I have not covered those cases, and that depends upon case to case, period to period. So yes, probably we'll also cover the ITC component in the probably in some other video. Now, this is with respect to delayed payment of taxes. Thank you.